All my Aduro videos so far have been covering the company from a pretty bullish perspective. So I was covering mostly all the upside, all the exciting things, all the things that might happen in the future that, will justify the stock price. But we haven't so far looked much at the, let's say, the bearish or the negative arguments. And in this video, we're going to look at the 5 most common bearish arguments that I was able to find about Aduro. We're going to examine them carefully and see if they hold any water, and some of them are obviously more legitimate than others. All right, the first one, and we're going to look at it from a bearish perspective here for a little bit. So the fundamentals of Aduro are obviously a disaster. So, the company has massive expenses and increasing losses quarter by quarter. They're burning massive amounts of money with nothing to show for it. So I feel let's just look at the income statement here. The revenues are almost non-existent, but if you look at like operating expenses, they are massively creeping up. By now they are almost like $4 million a quarter, so massive burning of money. If you look at the cash flows here, at free cash flow, they're burning over $3 million a quarter. It's always increasing. And, the company is obviously just burning money for nothing, right? There's no commercial products. It's all vaporware. They don't produce anything. They just give promises to investors and they, let's say, get fleeced and diluted, and all the money coming from, unsuspecting investors who just believe fairy tales. The technology is obviously not proven or validated. This is all just promises, speculation, and again, no commercial products yet, right? So it's all just, you have to believe the word of the management, and what if they are just lying and pretending like they have something serious here. And obviously, even if the technology is something legitimate and they will start to build commercial products, they will have to massively dilute to find commercial plants, right? They want to build, tens, hundreds, thousands of those commercial plants. They're going to be very expensive to build. And, especially once investors wake up and dump the stock, diluting will be very difficult, and the company will go bankrupt because no one's going to give them money to build plants, and the investors will reject it and the company will go to zero. So this is like the bearish argument, and I think most of it is just completely ridiculous, but we're going to look at it a little bit closer here. So massive expenses, increasing losses. I mean, yes, this is a startup pre-revenue company. I don't think these people ever, had any type of business experience or don't know what they're talking about. This is normal when you're just starting up, then you're not going to be profitable right away, especially, if you go into some very new field, an unproven field. Right, if you open up a grocery store, obviously you would expect from the beginning to be at least like break even or slightly profitable, right? Because it's a proven concept of selling food, for example. No commercial products. Yes, again, this is a startup company and has no commercial products yet. I mean, that's what defines a startup company. The word startup, when you start up, you don't necessarily have a commercial product yet. You're just trying, right? And over time, if the commercial product is a success, you might improve on the product and sell it to more people, hire more people, or produce different products that hit different customers and increase your revenues and profits that way. But yeah, technology is not validated and proven. I mean, that's depending on how you look at it. I mean, I think from most viewpoints, that's just not true, right? There are third-party validations from different professors, different companies. The major point here, they graduated from the Shell Game Changer program. They have multiple multi-billion-dollar, multi-year collaborations with very large companies. And so far, we haven't seen any negative news from there. And we're going to look a little bit closer at the Shell Game Changer program, what that is. So if you just go to shell.com, if you go to the Game Changer program section, if you look here, graduate since 2021, and Aduro's right here. So it's not just Aduro claiming, oh, we graduated for sure, believe us. You just go to the shell.com website, you check it out, Aduro's right there. And, Shell is the real deal. They have over $200 billion market cap, so it's one of the largest petrochemical companies in the world. And let's look how Shell describes the Game Changer program. The Game Changer program works with startups and businesses on unproven early stage ideas that have the potential to impact the future of energy. The program's team provides support, expertise, seed funding, while the startup keeps their independence and makes their own decisions. So, as you see here, Shell Game Changer program participants are startups with unproven early stage ideas when they start the program. So as Aduro has graduated, it's not an unproven early stage idea anymore. It's a proven, let's say, middle stage idea, but obviously still pre-commercialization. So they are not profitable yet and haven't built a commercial reactor yet. And the argument that it will have to massively dilute to fund the commercial plants, well, if you compare it to other technologies, the capex for Aduro is actually quite low. I don't have exact numbers because obviously the commercial plants don't exist yet, but don't think about like hundreds of millions of dollars, but think more like, $50 to $60 million US for like a small commercial plant. They don't have to fund it all by their own because, Aduro's main goal over the long run is to be mostly in licensing deals. So, let's say they provide all the technology, all the engineers, all the details of which equipment to order, how to construct it, how to assemble it, at which settings to run the facility, and how to optimize it depending on the feedstock. And, the partner will shell out all the money, actually order the equipment and, assemble it. And for that, Aduro will get a licensing fee, depending on how exactly the details of this deal will be. There's also joint ventures, where they just do, let's say, 50-50. So Aduro funds, 50% and the other company funds 50%, or closer to like a licensing deal where, the company provides the funding and Aduro provides the expertise, and then they split the profits in half or something like that. Project financing, also, just the company gets pretty much debt. Or, this would be more like, there are like so many options that they can pursue. And because the company is has such a, very, very exciting, sexy, and, almost like a monopolistic technology, I mean, I don't think it's going to be a big deal to find partners. And even if they have to fund it themselves, I think, the share price will be high enough. So, if Aduro will be trading at, let's say, like $1 billion or $2 billion market cap, spending like 50 million, 60 million on a commercial plant, the dilution is going to be, pretty low. And it's going to be accretive, right? Because they're going to massively increase their revenues. And if they're trading on a high revenue multiple, actually diluting to build commercial plants will actually be profitable for the shareholders in that case. Okay, so the second argument is excessive hype and promotional spending. So there are lots of pumpers who drum up meaningless hype without facts, especially look at X, all the various accounts that just repeat the same talking points over and over again, who might be actually even AI written, it's all like crap. And, many Aduro videos on YouTube, for example, are ad funded, so or sponsored videos, right, where the company pays someone to interview the management or produce a piece of content on a company or interview someone, and I would have to say personally, this is like the argument where I have to say, that something is, it's a little bit true, let's say, but I'm not the biggest fan of funding all these like tiny copy paste marketing accounts, especially on X or, former Twitter. I'm not the biggest fan of that, but, I don't think it's a big deal anyways. I think it has some positive impact, but, I can definitely understand this argument pretty well. But, we have to look at the facts of how much of a big deal that this is, because, this is like a major argument, right? It's like a top 2 argument by bearish people that there's like, they see a lot of hype from, let's say, smaller accounts that just over and over and over again talk about Aduro and mention Aduro in every post that they see. But if we just look at the reality, how much Aduro in total has spent on investor relations and marketing, about $60,000 in 2023, about $300K in 2024, and about $900,000 in 2025. And that's compared to all the money that are raised from shares and from warrants. So here we're going to assume that the warrants all get exercised instantly, which obviously is not the case, but it just makes the math easier. And I think in the end, it doesn't really matter that much. So in 2023, they raised about 3 million from shares and about 2 million from warrants if they were all exercised. And so far, because Aduro stock price has been rising quite steadily every year, most of the warrants are exercised eventually. So that's pretty much accurate. Just maybe the year will be different, but it's very difficult to do it in a different way for it to make sense. So in 2024, we raised about 9 million total. And in 2025, we raised over 50 million in total, which was major year, which we funded the demo plant fully, for example, and the completion of the pilot plant. So let's look at what we kind of have to add this all together for all years, because it's not always like a one-to-one which year corresponds to which spending, whatever. The easiest is just to add all of this together, and let's see what the percentage of spending it was from the total amount raised. And, drum roll, it's 1.4%. Wow. So one of the major arguments by all the bearish people is that, they spend 1.4% of the money that they raised on something which might be like suboptimal. Even if this money, all this like about like $1 million was completely wasted, let's say it had zero impact on anything, even then, like, okay, 1.4%, like, it's not 10%, it's not 20%, it's not 50%, it's like 1.4%. Like, honestly, like, who cares? Obviously, right? But I think definitely this had an impact on this. And if you look at this, the stock price just has to rise by 1.4% for it to be break even from marketing. And you just have to, through all the marketing channels, expose it to, let's say, one larger investor who buys a big chunk of Aduro and raises the price by 2%, let's say, overall. Then already the marketing has been a big positive. But also this is marketing bleeds into the future, right? So just because I marketed in 2025, it still has an effect in 2026 because I exposed it to more investors, which means the stock price rises further. And, future raises will lead to less dilution. Which, again, even if you're of the belief, I would say I'm like halfway there. I think like, it's questionable to me if it did or did not give Aduro 1.4% raise. I mean, I can't know, right? This is unknowable, let's say. But it's like such a small percentage, and this is like people repeat this over and over and over and over again that, there's so many people talking about Aduro. I mean, first of all, I think a lot of people who talk about Aduro on social media are actually not paid. They just are investors in the company and want the company to succeed and obviously to make money. But yeah, I think it's one of the weakest arguments, even though it's like one of the most repeated arguments, which, yeah. So before we continue to the next point, if you haven't already, please subscribe to the channel. It's currently the best way to support me, so I can keep doing videos for you guys. So just quickly check below if you're not subscribed yet. Just hit the button and let's move on, guys. Thank you so much. All right, the third argument that I see is the price is ahead of the fundamentals. Now there are like lots of variation what exactly people mean by that. Typically they mean, the technology is not there. Again, this goes back to the point number one where, the fundamentals are not there. The company is still bleeding cash and is not profitable, but is still somehow trading higher and higher and higher in the stock price. But my counter argument to this is simply the stock market price or the market cap is still vastly below other competitors while having a vastly superior technology. So what I mean by that, if you valued companies like Aduro purely by the quality of the technology, let's forget everything else. Let's just focus how good is the technology and what is the value from that. I mean, if you just value it by the technology, I would say Aduro is worth like $10 billion, something in that range, right? And, market cap is like 500 million right now. So this argument is completely ridiculous and falls flat. And, just because it doesn't show up in the financial statements yet doesn't mean the company has no value, right? Obviously, right? If in 2 years you're going to discover a huge, have like a huge discovery, just because it hasn't happened yet doesn't mean it has huge value, right? Let's say, you're going to win the lottery in 2 years. Does it mean, and you know that for sure, that you're going to win the lottery in 2 years, right? 100% chance. Does it mean that you or your financial future has like no value? You're going to be, that makes no sense, right? Just because there's no commercial product yet doesn't mean the company is valueless, right? I think there's a lot of people who really don't understand, who understand like just enough accounting to look at, the net income is constantly negative and falling, but they don't understand enough accounting to understand how to value a company, right? I can go a little bit into detail, right? If you want to actually value a company, the most, let's say, classical and, I would say well understood method is something like, free cash flow model or discounted cash flow model, right? Where you look at how many cash flows am I predicted to get in each year, and the further into the future it is, the less it's worth. Obviously, I would rather have the money now than in the future, but if I get a lot of money in the future, it might be worth waiting. And the same as here, the case, let me expand on it a little bit, right? So let's say you want to build a power plant, and it's going to take you 5 years to build a power plant. Obviously, in those 5 years, you have no commercial product to sell. You don't produce electricity yet, but you have to dump massive amounts into, permitting, constructing, training staff, whatever. And in those 5 years, you're just burning massive amounts of money, right? That's like similar to a startup company, right? And after your power plant is done and you start produce electricity, let's say the first 5 years, you're just recouping the costs of construction, right? So you actually have revenues and profits, but you still have to, let's say, pay back loans that you took when constructing the power plant. And only after you produced it for 5 years, now suddenly you can you produce profits that go to your bottom line and that you can pay out to your shareholders, for example, right? That's just how a startup company works. And in Aduro's case, I think because their construction costs are quite limited, I think they're quite quickly gonna, let's say, quote unquote, pay back the money and then produce cash. But in this case, Aduro has share funded itself. Aduro has zero debt. So that means right away the cash is going to be going to the shareholders, which is great to see, I think, when it happens. And, this whole stock price is ahead of the fundamentals. I mean, I think it's quite clearly just irrelevant to the basic thesis. So the basic thesis of Aduro is they have the best plastics recycling technology in the world. It's going to be profitable and it's going to be a quasi-monopoly technology because no one has it, right? Which will lead to Aduro being the first profitable chemical recycling company in the world, which again, they're going to have monopoly profits and they're going to quickly expand because the market is just so underdeveloped. There's literally, millions and millions of tons of plastic waste that have no use. And, if the thesis plays out as we think it will be, then over the long run, Aduro will be trading at triple or quadruple digits in the share price. So whether it's at $10 or $20 right now, it's like completely meaningless information. Yes, you will get double the shares if you buy at 10 versus if you buy at 20. But over the long run, I mean, I think the whole concept that the share price tells you how good the company is just wrong, right? Because if that was the case, if, you never would have to do any stock analysis because everything would be priced exactly with how much it's worth. But if you dive into smaller companies, that's obviously completely ridiculous and not true, right? And one point that I have to give to the bears, which they are true, they are accurate about, and which I personally have, let's say, emphasized not enough in my past videos, or glanced over it, or told people that they always hit their timelines. What I meant it in a little bit different way than what I said. So Aduro's longer term timelines have been delayed multiple times in the past, but always for the sake of risk reduction and a very conservative approach. And, Aduro has been giving, let's say, shorter term timelines or shorter term goals for, like, let's say the next 12 months, we will build this, we will get patents, we will do this and this. And this, in general, they have hit. Not always, but in general, right? But all these, like, longer term plans of, like, 2, 3, 4 years out, when they talked about in 2022, in which year are they going to be profitable? Is it going to be 2026, 2027, whatever? These definitely got pushed back, right? Which I think the bears have an argument, right? The initial timelines when we expected the company to be profitable have been pushed back. But I think for very good reasons, but the fact is they did. But my argument to why this is really a minor point is that, a year or two in delays is not substantial in the grand scheme of things. This goes back to, if you knew you win the lottery, would it make that much of a difference if it was you win the lottery today or in 2 years? I mean, doesn't really matter. The rest of your life, you're going to be, wealthy, right? It doesn't matter if it happens now or in 2 years in the grand scheme of things. Of course, it would be a little bit better if it happened now and not in 2 years. But, if they're going to be, profitable in 2027 or 2029, like what it seems it's going to be in reality, I mean, again, with this whole discounted cash flow analysis, I mean, it doesn't really matter if it's like 2 years later. I mean, yeah, I think it's a little bit overblown. And again, the upside that we get from that is risk reduction. So the company really takes risk serious. And, I think it's just better approach, but obviously it has downsides. And we have to be real here and acknowledge that, yes, Aduro is, from their original timelines, they are delayed. And the fourth argument, I see that they have bloated SG&A and low R&D spend. So SG&A is selling general and administrative expenses. So this is mostly, let's say, salaries of employees that just do, like, the general stuff. And the expenses are high and they don't invest enough in R&D, even though, the technology and the science is supposed to be the strength and focus of the company, right? So the whole thesis and the whole strength of the company is the actual underlying technology, and they don't invest that much into R&D, so what are they even doing? Well, let's dissect it and look into the facts. So over the last 12 months, they spent about 5 million on R&D and about 7 million on SG&A, which, for a company of the size of Aduro is really not that significant. I mean, for a company with like a 400, 500 million market cap, spending like 7 million a year on SG&A, I mean, that's really not that much. And the reason why R&D is only 5 million, because, the technology is already developed, right? They done all the research from 2011 to 2022. They discovered first, the heavy oil upgrading, the bitumen upgrading, and later on they discovered that this can be applied to plastic recycling as well. So once you've done that, well, I mean, you don't really need research anymore. Or obviously they still do, but the fundamental technology exists already. So, it's once you discover it and patent it and protect it, protect all the details, this is mostly just like fine-tuning or expanding it to a little bit other verticals, but I mean, I don't think it's a big deal. And this whole, they spend so much on SG&A, it's so bloated. I mean, the CEO's total compensation is less than half compared to similar companies, right? So this is from Simple Wall Street, the website which compares it, and the CEO's total compensation is less than half of the average Canadian market companies with a similar size. So, I don't know how reliable this indicator is, obviously, but it seems to me just napkin math, looking at it like approximately like, yeah, the company is not overspending, ridiculously or on any useless stuff, right? I think it makes sense. And the fifth and last argument is bad technicals. So, Aduro stock chart obviously looks like a typical insert various chart pattern here. So, all these drawing triangles, drawing stick figures, whatever. So stay out for now. Now, I personally am really not... I'm not a big fan of technical analysis, or personally, I don't focus on it almost at all. So for me, it's like pretty irrelevant. I just look at I just look at the fundamentals of the company. How much is it worth? How much is it trading currently on the market? If it's massively undervalued, I buy it. If not, I don't buy it. Even if the company has run up quite a bit, if the fundamentals improved enough, I will still buy it, right? That's how I personally look at it. But obviously, you have to look at the facts and not just what you personally think or what you personally vibe with. And I did a little bit of research into that, and there are certain indicators for like the general market health, or when the general market will turn. But when it comes to picking individual stocks, from the papers I was able to find, there's really only one type of technical analysis in individual stock picking that has been scientifically shown to outperform. So, following this analysis conclusively gives you, let's say, on average, better returns. So from a paper, they showed that the superior performance of the trend factor, which is the factor that they examined whether it actually robustly generates outperformance. It's robust to various, I'm not going to read it all, but, they shown that focusing on trend, stock price trend, is actually very robustly giving you outperformance. And what exactly do they mean by trend? Now, they use a pretty complex formula in the paper, but very, very simply, the trend is just combining multiple time horizon moving average. So just very simple moving averages. And for example, what this means is when a stock price is above, let's say, all of the 10-day, 20-day, 50-day, 100-day, 200-day moving average at the same time, the stock will likely outperform. So, you can, for example, average it out. So how much are they above the 10-day, the 20-day, whatever? You just average it out and see, how much above these moving averages the stock price is. And again, I was a little bit surprised, actually, that this is scientifically proven. And the outperformance is actually quite significant. But, keep in mind, this is in 2016, the paper. So by now, the market might be quite different 10 years further into the future. But, I have no reason to doubt this finding. And yeah, so again, if the stock price is above all of the moving averages, the stock will likely outperform. So it's a good entry into the stock. So let's look at what Aduro currently is at. So this is as of the recording of the video. And, the moving averages here. In the paper, they look just at simple moving averages, but we're just going to add like exponentials because I don't think it really matters that much. So the moving averages are like about like $11 to $13. And as of the 16th of January, stock market close, the stock price was at $14.90. So above all of those averages. So even if you wanted to look at it from a technical analysis perspective, the only scientifically proven technical indicator that actually gives outperformance gives Aduro a massive green light. So from the technicals, Aduro is a massive buy here. So all of these arguments about back technicals really don't apply at all to reality. All right, so that's it. Subscribe to the channel to support me for more regular videos. I've been quite enjoying making those videos, and I will keep going as long as the support is as strong as it is right now, and as long as you guys keep subscribing. So yeah, thank you guys for watching. See you guys next time.